We have lots of Tesla stock breaking news today, but none of it really quantifies Tesla being down 3.4% today. So on top of the Tesla stock news, we will also go over what's happening today. Why is Tesla selling off so much? And this will actually surprise you. This almost needs a drum roll. The economic data came in too good today. Durable goods orders month over month were revised lower from last month, from negative 6.6% to negative 6.9%. The consensus was for positive 5% durable goods orders for the month of July. We came in at positive 9.9%. So that was a sharp rebound from last month's really negative number. If you look at durable goods orders excluding defense, you were expecting 2.2% and it came in at 10.4%. Last month was revised to negative 7.5% from negative 7%. So if you equal out the last 2 months, like you're positive 4% or so on almost both of these measures, that's not too crazy. But the markets were not expecting such a sharp rebound. So what's happening today is the stocks that are the most dependent on interest rates are selling off. That would include Tesla, that's down 3%. And it's really just a mixed bag. Even in my portfolio, Tesla's down, Fubo's down, Crocs is down. But then you have Nike that's up, you have PayPal that's up, you have CVS that's up. It's kind of a mixed bag across the board. Big tech is weighing down the indexes a lot today. You can see Amazon is down 0.5%, Meta's down 1%, Nvidia's down almost 2%, Apple's down 0.5%. So without these big tech names being a drag on markets, you would actually see the S&P quite positive today. And if you look at the RSP, the equal weight S&P is actually up 0.14% today. So you're actually getting the average stock in the S&P that is moving marginally higher. But anything that's really super interest rate sensitive is selling off. And that's because of the strong economic data, and that is pushing down the odds of a less or a more aggressive Fed and a more aggressive Fed cutting cycle. But really, this data today is very encouraging if you are in the soft landing camp. I mean, sure, we can get simple corrections. We can get downturns, election corrections. But that's probably going to happen over the next couple of months. But if we get a 30, 40, 50% crash from here is really dependent on the economy and dependent on avoiding a recession. Now, depending what camp you're in, if you're like me and you have a lot of cash, you're ready for a crash. You hope a crash comes. But for the average American, for the average investor, they probably don't want to see a crash or a prolonged period of weakness in markets. So if you're in the soft landing camp and you do not want to see a crash, a large crash that is, today was actually a big win. As far as Tesla news today, Tesla is going to open their first store and service center in Western Massachusetts in the town of Springfield. If you are a Simpsons fan like myself, well, you would assume that is where the Simpsons were created. And I actually Googled it because I was way too fascinated by that. Apparently, Springfield is actually in every state and nowhere at all. So the Simpsons just use Springfield because it's a very common name. But we'll go with Tesla creating a service center in Springfield, Massachusetts as the home of the Simpsons, because why not? Now, this is truly impressive. This is the training center, the Cortex Center of Giga Texas, okay? And this thing is massive. Just rows of GPUs. Like, as far as you can literally see here. I mean, those people look like a pretty far distance away. And it is just rows of these GPUs. It's actually insane. Oh, it's quite loud. And it looks like they're actively, working to get this thing online. do not believe it is online right now. Just look at this. That is wild. Literally just goes on and on. Elon Musk says video of the inside of Cortex today, the giant new AI training supercluster being built at Tesla's HQ in Austin to solve real-world AI. Sawyer Merritt says first ever look at Tesla's new massive AI training supercomputer cluster inside Giga Texas. When complete, this multi-billion-dollar setup will be one of the largest supercomputers in the world. Canada, following the lead of the United States on Monday, said it would impose a 100% tariff on the import of Chinese electric vehicles and also announced a 25% tariff on imported steel and aluminum from China. Tesla is adding SiriusXM internet streaming in a new software update. Tesla has further extended its 5-year 0% interest loan incentive for new Model 3 and Model Y purchases in China to the end of September. And following this new promotion package or plan that Tesla has, Sawyer Merritt is reporting that at least 6 of you guys have used his link to buy yourself a new Tesla. And here we have 126 Cybertrucks just sitting in the outbound lot at Giga Texas, ready to be shipped off. Well, this was 126. If you add this, you're closer to 160 or so. So it looks like production is really starting to ramp up. And by the end of this year, we are hoping to get production up to 1,000 per week. That would be 52,000 roughly a year, and that would be a pretty good rate to be at by the end of this year. And it looks like, from my perspective, Tesla's probably on track to hit that, if not beat that. Tesla is about to reach the milestone of 60,000 Model Y vehicle registrations in Norway, currently at 59,559. Barron's says robotaxis are closer than we think. Tesla will have competition. AI Root says that's okay for one analyst though. There is room for everyone, which again, just in case you're not familiar with the current landscape of robotaxis, Tesla's software is going to be able to launch really simultaneously in many different cities at once, pending obvious regulatory approval. But a Waymo, for an example, has to be mapped out. The cities, the roads have to be mapped out. So it's going to be a slow and gradual process of expanding that into different cities. And a lot of cities will never have Waymo, okay, because they are Google-owned vehicles and operated. It would take, I mean, I don't even think it's plausible or possible to really have a Google own enough vehicles to service the entire United States, let alone other countries across the world. So that's kind of the deal with Waymo. Waymo is really the only quote-unquote competition Tesla's going to see. Cruise operates in a limited fashion. For a while they were not operating, and it's really unclear if Cruise is going to survive in general. So really, as far as solving the robotaxi issue at large, to getting full self-driving vehicles out on the roads, to getting fully autonomous, ride-hailing services out there, the only one that's doing this at scale or will do this at scale is Tesla. And I do find it quite fascinating that Barron suggests that Tesla's robotaxis could be coming a lot sooner than people think, because that is the holy grail for Tesla. That is the difference between Tesla being a $1,000 stock and a $200 stock like it is today. And heading into October 10th, I do think there's going to be a lot of excitement, a lot of enthusiasm around the pending launch of the robotaxi network. I do think on October 10th specifically, the one thing that matters for Tesla stock in the near term is, when does Tesla expect to launch the robotaxi network? Tesla can say great things, they can show great initiative and promise in their endeavors, but Wall Street just cares about, hey, when does it start? Is this going to be a 2025 thing? Is this a 2026 thing? Is it later than that? That's what Wall Street cares about, and that's what will affect Tesla stock the most. There was some, I guess, bad Fed speak today. Fed Barkin says there is a risk that firms will resort to layoffs if the economy weakens. Mars Catalog on X says soon there will be no point in recording FSD videos. Like, there's really not going to be any interventions. It's just going to be recording you driving. Elon Musk says it will be so commonplace, in reference to just not having any interventions. And Tesla ranks #1 in technology innovation per JD Power's study. As Mike Zaccardi on X says, small caps have gained the most when the Fed has cut rates. In the first 3 months, you do get this outperformance of 10.9% compared to mid caps at 9.2% and large caps at 5.6%. Over the next 6 months following the first Fed cut, small caps are up 14.2%, mid caps up 12.4%, and large caps up 9.4%. 12 months later is where things get really impressive. Small caps tend to be up 26.6%, mid caps up 22.4%, and large caps only up 15.6%. That is 11 percentage point underperformance of large caps to small caps when the Fed starts cutting rates. Now, why I point that out is because Tesla sure may not be a small cap company, but it has the same exact parameters of a small cap company. Besides, Tesla's profitable and a lot of small caps are not. There's many more similarities, like Tesla's consumer base is very dependent on interest rates. Tesla could be the most interest rate sensitive company because of that. Tesla, while they are self-financed, they don't need to go out and raise capital. As rates do go lower, as Tesla invests more, it may make sense, it may help Tesla out to be able to raise capital at lower rates. And Tesla is the ultimate growth stock. So if you are an investor and you get paid 5% on short-term or long-term treasuries, buying growth, long duration growth that is, really is not attractive. As rates start to fall, from that perspective, Tesla gets much more attractive as an investment opportunity. As far as option activity from Tesla, you have seen 9 different trades totaling $1.31 million with a positive order value of 68%. Tesla's short interest of free float sits at 3.13%. You do have $19.14 billion currently sold short in Tesla, totaling 86.87 million shares. Here on the day today, it looks like 81,000 shares on net are being sold short today, but that's just a drop in the bucket compared to what's the overall amount of shares outstanding. It's what I would call a pretty neutral day as far as shorts covering and shorts adding to short positions. CNN's Fear and Greed Index today is moving up 3 points from where you were Friday. Friday, you were neutral at 52. Today, you are neutral at 55, almost in greed territory. Over on StockTwits, sentiment for Tesla is neutral at 46. Yesterday, or Friday, I should say, sentiment was bearish at 43. Message volume is higher today at 43. Yesterday, it was at 32. And the participation ratio today is a lot higher. It was previously at 55. Now it's at 57. The percent of stocks currently trading above their 50-day moving average sits at about 67%. You're down negative 0.08% today. So it's not a bad day by any means. As far as Google Trends activity, the Cybertruck is ticking up from 65 to 70. The Model Y is going up from 27 to 30. The Model 3 is actually falling from 27 down to 26. The Model S staying steady at 11, and the Model X going from 9 to 10. So very strong levels of search trend activity, specifically for the Model Y and again for the Cybertruck, whereas the Model 3's just staying at a really good level. So let me know what you think about this information down below in the comment section. In the next video, we will talk Tesla's technicals a little bit more and what the technicals are suggesting for Tesla stock. And I gotta be honest, today was a big win for the soft landing camp. I don't think today was bad for Tesla. Even though Tesla's down 3%, I think that's something that could correct here pretty soon, because it's not really a justifiable reason to be down 3% with the kind of data that we got today. And we didn't get any bad news for Tesla either. That's worth mentioning. So again, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.